welcome back to Lunch at the Market. What a fun day, right? Tons of fun with the market just selling off forever and ever and ever, which is what they might actually do until we get earnings in July, which is the reason that we talked about selling in May and going away for like 2 months, because now it's here and it doesn't feel very good. But we're actually taking off our S&P 500 hedges today because the reality is, seriously guys?
It's like not going up.
Seriously? Thank you. Fantastic. That's what you get when you have highly paid office staff, right? Awesome. Anyway, our S&P 500 hedges just really aren't getting us the bang for the buck that we need. Why? Because if you price the 135, 131, 130 put butterfly that we had long, if you put on the same trade today, you'd only get about 275, 285, and max profit, as long as the S&P 500 is below 1,300, is $3. And so rather than sit around and wait for another maybe 25 cents, we're taking those off today. So we're going to be taking a look at other ways to profit from continued downside, including looking at names that are clearly stuck in downtrends. We're going to continue to press those bets by getting long puts. We're going to look at July puts. We don't want to be long puts too far into the calendar, because again, I think that once we get to earnings, the situation improves itself and you're going to want to be long biased, at least those quality names. Certainly there are always going to be stocks that are just performing terrible, that are over levered, that have failing business models, that don't look so good. We'll try to continue to identify those. For now though, we do have actually 2 plays that we like from the long side. Again, as the markets continue to decline, obviously stocks get more and more appealing as the price goes lower and lower. So 2 names that we like are Visa and Deere. The first trade in Visa, for the fast money, we're selling the 75-70 put spreads in July and August, or in June and July, and you can also get long in the money call spread 70-75 for September. So you've got your slow money trade to sit around and wait. Those spreads should be about $3.60, making break even for the trade at $73.60. That's quite a bit lower than the stock is right now. It's trading around the 78.5 level. And then again, we've got a $3 and change cushion, and only after today 9 trading days left until options expiration. So we don't mind being short that 75-70 put spread that expires next Friday. Also, Deere. A lot of the industrial names are getting pounded pretty good. Deere is down, say, somewhere between 20 to 30 cents. It's down less than 0.5%, and other names in the same space are down more than 1%. And so we think that the selling is kind of getting exhausted. It's growing old. The stock's been selling off since $100 a share. It's now trading around 81.5, I believe, last time I looked. And it's just running out of sellers. The people that want to be out are out, and the people that want to be in are starting to show up. And so the stock is down very little on today, a day when pretty much everything, the baby's getting thrown out with the bathwater today. So the fast money trade there is to be short the 80-75 put spread that expires next Friday, and then you can actually sell spreads each month out on the calendar until we get to, say, December, something like that, September, October, November, December. So go ahead and take a look at those 2 trades. Again, we like the 80-75 put spread to be sold in Deere, and we like the same thing in Visa. You can kind of place the same bet in Visa. You could sell the 75-70 put spread in Visa on as many months as you want on the calendar. Again, keep in mind that your exit strategy, should it go against you, is to roll that out or down and out. So you don't want to end up with a month where you just have a huge position unless you're comfortable with that. But those are the plays that we like. We're going to try to squeeze off some short bets here between now and next Friday to take in some premium to make up for what a terrible month April and May have been, May and June have been. And short of that, we're starting to look out longer end on the calendar. We do like the in-the-money call spreads, really both on Deere and on Visa. We like both those names. We think that by the end of the year, both of the names finish higher than they currently trade today. And so if you get long a completely in-the-money spread, by the end of the year, you should be just fine. We don't pretend to know when the turn comes, so be cautious out there. Keep your position size small and appropriate. You don't want to make any large bets now because, again, in a few days we could see even better pricing then than we did today. So we just want to nibble, dip our toe into the water, begin to get long. The further we get closer to that 1284, which is the key level of support, the S&P 500 index, keep in mind that if that breaks, your next level of support really isn't until 1254, so there could be quite a bit down. So we're going to start looking to hedge with maybe weekly puts either this week or next week. So that way, if we see a massive decline, we have something that we're going to take. We're going to get some profits and then take those off the table as we get. And if you get short-term bets to the downside. So let's say you go out and you buy some 129 weekly puts that expire this Friday. If those things get up 30% between now, putting them on now and expiration, which is 4 days from now, it really is going to behoove you to take those off and just kind of reapply, kind of like sunscreen, right? You only have it for long enough for it to work, and then before it doesn't work anymore, you take it off. So we'll call it the sunscreen approach to protecting your portfolio. And again, we do have those 122 August S&P SPY puts that we do like. We're up a little better than 10% now on those, and we'll continue to add on rallies. We'll add to those on rallies, and then we'll be able to sell weekly puts against those to kind of recoup our loss, so that by the time we get to August, we should have those puts for free, and then we'll see what happens with the debt ceiling. Until then, again, keep your position size small, be nimble, don't jump all in head first now. So the last year, everyone kind of watched the ticker waiting for a 10% decline. Finally, we got it last summer. We actually got a 16% decline, and so markets usually overshoot to the downside and to the upside. So please be aware that we could get more than a 10% correction here. Just be prepared. Thanks again for tuning in for Lunch at the Market. Have a great day, and we will see you tomorrow.